All right, so welcome in today. We're going to dive into, I think, a topic you guys see a lot here on our show, and that is talking about Mr. Gensler, the chair of the SEC, and his now new potential pressure on Coinbase. But is there something else going on? So we're going to break that down for you. I think we have an interesting show for you lined up today. My name is Paul Barron. Welcome back into Tech Path. Before we get started, thanking our sponsor, and that is iTrust Capital. If you guys are looking at long-term holding, check over onto iTrust Capital. Did you know that they were one of the first that relisted XRP? And of course, you can actually put XRP in your long-term IRA, your crypto IRA. So check it out. If you're looking at gold, silver, any altcoins you can imagine, all of that can be managed within the app. And the cool thing, no monthly fees. You just pay for your active trades. That's the way it works. Whether you have a current existing IRA or maybe you want to start one, all of that can happen over on iTrust Capital. Just check it out. Just click the link down below. It does help the channel out. All right, so let's get into a couple topics here. I want to play this video right here by Stuart Alderati. This is a good one. Listen in.
What do digital assets have to do with orange groves, barrels filled with whiskey, payphones? Who remembers those? And beavers? Well, it turns out a lot. None of those things, standing alone, are securities, but any one of them can be packaged into a contract for an investment that may be a security. Huh? Let me break this down a bit. The law lists a bunch of things that are securities. That list includes things you ordinarily think of, like a share of stock. Why is a share of stock always a security? If you own a share of stock in, let's say, Apple owes you a fiduciary duty, and you can hold Apple accountable if they don't fulfill those obligations. That's true no matter how you bought the stock or who sold it to you. But the law also includes something called an investment contract.
One thing I'm getting
in the
at
list
here
of things
with this
considered
one
a security
is the fact that Stuart Alderati, obviously the legal counsel for Ripple, in that case, and really what's happening here is he's trolling Gensler. These kinds of videos that he was just doing are almost carbon copies of what Gary Gensler is doing when he's explaining crypto scams to investors. And I think that's the counter that XRP and Ripple are about to do. Now, the question is whether or not Coinbase is also pulling a little bit of this. So here's the story. Coinbase CEO says SEC told it to delist everything but Bitcoin. And this actually happened earlier in the month. The reason that I think it's interesting that it's coming back is I think this is something that Coinbase is actually re-energizing back into the market to show just how ludicrous and how crazy the SEC has become, especially now on losing, to a certain extent, the case against Ripple. At the time, the SEC reportedly said it believes every asset other than Bitcoin is a security, said Armstrong. We said, how are you coming to that conclusion? Because that's not our interpretation of the law. Obviously, neither is it of the interpretation of the courts, which is the biggest issue here. Of course, within that, you got meta lawmen. Why is the Supreme Court as a major questions doctrine? This is political appointees of executive branch agencies do not have authority to eradicate an entire industry, which is what he's talking about. Under the what they call the MQD, Congress gets to decide the big policy questions like how crypto will be regulated. This isn't meaning basically what what Meta Lawman is talking about there is it's not up to Gensler. It's really up to our lawmakers, and all of that is usually done through the court system. That has already spoken. And of course, this is all now starting to play into the hands, I think, to where finally Coinbase may be on the offensive here, meaning they're injecting this back into the populace. If you look at the video that was done on this was actually the video by the Wall Street Journal quite a bit ago. Listen to what they said.
And, fast forward, a year later, we started to hear some conflicting statements from the SEC, the CFTC. Generally, when we hear updated information from regulators, we go in and we talk to them. We say, great, if the rules have changed, how can we adjust? And an example of that was they said XRP we think might be a security. We said, okay, we want to act in good faith. We'll delist it. We don't know if it's a security or not, and that court case is still playing out. But we want to be collaborative and work with regulators. And then something shifted about a year ago. A totally different tone started to happen, and we kind of got this information from the SEC that, well, actually, we think everything other than Bitcoin is a security. And we kind of said to ourselves, well, that's not our understanding of the law. How are you coming to this conclusion? And we were sort of met with silence, right? We did a series of meetings with them, probably 30 meetings over the last 12 months, where they asked us every question under the sun. We kind of, told them everything we could about our business, but we didn't really get clarity from them about how we could come in and register, which assets they had a concern with, why there's contradictory statements between them.
All right, so this was the video that was done by the Wall Street Journal, that interview with Brian Armstrong, CEO of Coinbase. If you're brand new to our channel, maybe you're brand new to crypto, what's happened here is Coinbase got a Wells notice basically from the SEC saying, hey, wait a minute, you're selling unregistered securities, you need to stop. Then within that, they said, maybe it's all things that you're selling. So essentially they kind of told Coinbase to just stop doing business, in essence, after they had approved an IPO. If you know what an IPO is, that's a publicly listed company now that has investors in the stock, which is coin. So if you're trying to protect investors in a scenario that you've already approved the IPO, in which they showed you the business model and explained what they do, and now coming back in on this, it really does make as though there is a hidden agenda, I believe, here, obviously with Gary Gensler. The interesting thing is that this resurfaced. This video, this topic resurfaced back into the narrative. I think it is Coinbase putting a lot more political pressure on Mr. Gensler. And this, I think, comes at a very interesting time because we are also moving in to where we're getting some regulatory framework that's going to the House floor. A lot of policymakers, lawmakers are in the midst of doing a lot of interviews, requests for information, all these sorts of things that they're essentially going to go to the floor of the House with to possibly send a crypto regulation through the House and into the Senate. So a lot playing out very interestingly. This, of course, was from Wu Blockchain. It says U.S. SEC asked Coinbase to halt trading on all cryptocurrencies other than Bitcoin prior to suing the exchange about more than 200 tokens it offers. So again, back to my point of that it is a scenario where the SEC pretty much just said, okay, you're a publicly traded company and we're going to just lock you down and tell you can't do business anymore, even after we've approved you and essentially set you up to go out and get investors on the New York Stock Exchange and go out and sell a token called coin, which is a registered security. Further in this, SEC warns accountants. This is interesting. Now the SEC is saying, hey, wait a minute, accountants don't partake in any mislabeled audits for crypto exchanges. So now they're telling the finance community to not do business with these organizations, these exchanges. And in the article, this is very interesting because this is quite a bit of overreach. U.S. Securities Exchange says issued a warning to accountants this week, cautioning them not to partake in misrepresented audits. Crypto exchanges and other digital asset companies have been tapping into accounting firms for review of their business and then passing those partial reviews off as audits. As accounting firms increasingly engage in sort of non-audit work, risk misleading, suggestive that alternative non-audit arrangements with parity even more precise than financial statement audits, such suggested are false. Non-audit arrangements are neither rigorous nor comprehensive as financial statements. Here's my question. If you're investing in anything, now, most of the time, if you're going into a private business, an audit is worth it from a third party. You're going into companies that are just saying, hey, here's from our accounting company, here's our current P&L, which have been audited. Those are not big claims that I think a lot of people would look at and say, I'm going to invest in that because it has audited P&Ls. This is a thing that I think and I find a huge overreach by the SEC. And in fact, the SEC commissioners find that it's an overreach as well. Here's Hester Pierce criticizing the SEC's warning to accounting firms to work with crypto. Again, this is where it gets really interesting that the SEC has so much infighting and so much disagreement within the commissioners. Now, this only tells me one thing. This is a political landscape now in full force. It is no longer enforcement by litigation now, or even just by issuing Wells notices, etc. This is now, I think, a true political landscape. Within this article, it says certain crypto asset trading platforms with other crypto industry have marketed to investors or retention of third parties, sometimes accounting firms, to perform some part of a review of certain parts of their business, often presented and purported as audits. This is kind of where they were going. This was very similar to this previous article that we talked about. The point is that I think that they're getting into this, and this is where she's talking about this, crypto platforms and their accountants should be clear about what proof of reserves is and isn't with customers, and should understand the limitations. Why would you want to discourage good faith efforts to provide more transparency? So what they're simply saying is, these kinds of financial things are third party. These are accountants going in, looking at the books, saying, yes, this is good. Where it gets interesting is if you could say, give me proof of reserves. Now you've got something that's a huge transparent opportunity. And anybody that gives you real proof of reserve is a good guy, because they're clearly saying, hey, we're fine with it. Here, this is all of our Bitcoin that's backed up all of our customers' Bitcoin. You get into commingling funds, those kind of things that are really the problem that most of these issues have faced. And if you think about this, and you look back at what happened with just FTX, had Gensler been this aggressive with FTX, imagine the amount of investors he would have saved. That's right. That's the SEC's job, is to save investors. So just by being able to, if they had just filed a notice, if they'd have went and said, hey, we're going to go in and prosecute, Sam Bankman-Fried, if we're going to go in and start to question these kinds of practices, even though they're not a U.S.-based country, but they're doing business in the United States, obviously with the FTX US platform, that never happened. So why is it that who, of course, we already know the run behind what SBF and Gensler had in terms of potentially political ploys, that is a scenario that I think will continue to haunt Gensler overall. Here was, of course, Mental Lawman coming in. This was a 3-judge panel of D.C. Circuit, just invalidated an SEC order on grounds it was an arbitrary and capricious. This is, again, more of this situation where, though, and this actually came in from Eric Bakunis last week that we were noticing, but the point is this arbitrary and capricious. This language has been looked at, and this is all referencing the treatment of spikes, which was a futures trade that kind of played into this. And the scenario that I think is showing up now is there seems to be a pattern coming into this around the SEC, and that is that the courts are not agreeing with the process in which they're doing this, and nor do they think they have a good position from a legal standpoint. So again, obviously that was why we saw the play out there with Judge Torres with the Ripple case. This is another thing right here. The headline is pretty straightforward, but he's blasting exchanges, we know, but he's avoiding the issue of appeal in the Ripple ruling. This is intriguing to me because a couple of things have to happen for an appeal to take place. One, the commissioners has to basically come together. Remember, I think there's 5 commissioners. They come together, but essentially what they're looking for is staff support that be able to bring that to where they even consider appeals. And there, in this particular case, Gensler continues to avoid this question in all the videos that we've been showing over the last week or so. He's continued to avoid this. So this tells me one of two things. Either one, there's not enough strength there within the SEC or stomach to go after and do an appeal, or they're concerned that by just launching the idea of appeal is going to continue to cause a lot of triage on their political ploys throughout the next election series, which is obviously Senator Warren, I think, is tied to Gensler very closely. So that could play into this. So very interesting stuff. Further into this is the demand on what's happening with crypto. And this was a report by Ripple. And I'm going to show you a few points on. Let me see if I can go to the couple of the highlighted areas on this. This wasn't one of them. This was the first one I wanted to get to right here. This was just talking about stablecoin adoption for payments likely attributed to the cost savings of cross-border payments. Basically, 80% less expensive and so on. Price is a big deal with how people are looking at crypto as a benefit, and that is that everybody thinks that it's going to be able to reduce a lot of these costs. Further in this report right there, it says 97% of these respondents in this report believe this technology is going to basically significantly or a very significant role enabling faster payments within the next 3 years. That was what surprised me, is the speed in which all this was going. Further into this, there was a couple other charts I wanted to show you. When do you think merchants would start accepting crypto? I was surprised with this one because I did not think we would see a 1 to 3 year being so. That's the light blue. What you're seeing is the light blue bar. And what you've got like here is like North America right here. Currently within the next year, only 18%, but 51% right there in North America within the 1 to 3 year span. And then right there, you've got another 30% on more than 3 years. So basically what you've got is almost 70% coming in and saying, we think crypto is going to be in retail and in environments within the next 1 to 3 years. Then you've got APAC in there, Europe, of course, at 58%, and then Middle East, obviously, at 64%. These are growing. Global, that still is almost 70. That is 70% of businesses. I'd love to know you guys' input. If many of you or some of you are, maybe everybody's a consumer, would you use a business that would take crypto versus one that did not? Further into that, let me know. Drop some stuff down in the comments there. What else did we have? We had some other cool things within this. Oh yeah, here was the other one. Fast solution. This is of course one of the biggest benefits now. Lower cost on international, which I think this is the big one right there. And then what else did we have? Here it is right here. This was another one that I wanted to show you here. So this is what people were saying as a barrier. What would be your barrier to enter crypto as a whole? Regulatory clarity, still number one on the list. So what does this tell you guys? What does this tell me? I think this is an answer right now that is about to go through, whether it's through the House, even if it gets declined in the Senate, turned down, the fact that it's making its way through, we would see a lot of anticipation around real regulation. But now I'm feeling much more heavy around the fact that it's possible we could see this pass through the Senate. And if it does, obviously this would alleviate this regulatory clarity concern that most investors have today. All right, further into this, of course, if you guys are not aware of Richard Hart, this is where Gensler, I think, is picking up some low-hanging fruit. He's basically gone after Richard Hart. This is the founder of Hex, sued by the SEC for securities fraud. Why didn't he do this with Sam Bankman-Fried? Not securities fraud, but the commingling funds, all those aspects of securities. Well, that would be securities fraud to a certain extent. But the point being is that we've got Richard Hart now on the wing. I think this is an easy, low-hanging fruit to be able to go after and claim a win quickly, or possibly claim a win if they can find Hart out there. This was a documentary. I'm going to kill that and I'll recycle this. But this was, if you are not aware of Richard Hart, I'll put this on screen for you so you guys can see the craziness that is Richard Hart. And we've had him on our show before, and we questioned him pretty heavily about, and it's very difficult to have an interview with Richard Hart. If you've ever seen anybody try to interview him, it's almost impossible. I think this guy is a certified genius, but I'm not sure that he can completely understand the process of being able to kind of see within his own actions whether he's right or wrong. That's the thing that is kind of intriguing about this guy. So anyway, for sure, not one that I would trust, would not invest in any one of those, and never have. So it is the point that I'm getting at, is this industry is fraught, like with other industries. Whether you look at the securities businesses, the amount of companies that are going out and doing Reg Ds, all the kinds of things that the SEC, which they have a hard job to be able to keep track of this. But it's so easy to be able to protect investors on this. And you go after the really, flagrantly bad guys and do it. And I don't understand why we didn't see that with FTX. So for sure. Interesting stuff. Now let's talk about JP Morgan. JP Morgan losing all sorts of depositors right now. Institutional deposits now are absolutely fleeing this bank. Biggest reason, and the one I think you guys kind of compare to, no yield. This is the biggest problem. But at the same time, what we're seeing is a lot of other entities starting to pay a lot more yield in these money markets. But more importantly, people are starting to move into DeFi, which is where really the juice is. I mean, that's essentially kind of the slam dunk that's out there. But this is the point, is that a lot of these younger investors are starting to really understand, and they're in on the joke. New numbers now showing cash deposits at JP Morgan's corporate and investment bank fell by 75 billion. That's a 10% loss in 1 year, just 1 year. Traditional banks also witnessing transition. Talked about this. If you haven't followed our bank videos, why there's been such a flight of capital, where it's moving to, even if you go into traditional markets and money market. Bank of America says corporate clients now hold 60% of the cash in interest-bearing accounts now. representing a 30% jump from 1 year ago. Now, all of this is happening because of one thing, and that's the Fed fund rate. The Fed fund rate now highest it's been since, I think, the last 25 years. That number, of course, translates, and if you're a Robinhood user, you probably got your note on Robinhood Gold that now it's almost 5% to be able non-invested cash if it's holding it in the app. Apple is paying for their savings accounts up near 5%. Most money markets are over 5%. It's easy now for pretty much anyone to start to make these passive yields on current money market or some of these high yield interest-bearing accounts. And a lot of these banks which do not have this are starting to lose out. And here's the cool thing. Everybody that understands how this works, they're one step removed from actually entering the crypto space and do something pretty amazing. So I think that's just a matter of time before we see it. Here was another headline right here. U.S. banking giant accused of abruptly closing accounts. This is another reason that I have. Of course, this was happening in Europe. But the point being is that banks are now, in essence, deplatforming almost in their own customers for whatever reasons, whether it's political viewpoints or others. This is the challenge and the problem that much of this represents in the banking ecosystem. And if you've watched this long enough, you understand self-custody, one of the biggest things we propose to all of our viewers. If you're not doing self-custody right now, you should be, whether you're using a hardware wallet, a software wallet, or something of that nature. The idea is within crypto is that you kind of become your own bank, and the opportunity is real going forward. I think this is going to be the kind of the future of where all of this is going to go. Here, of course, is Raoul Pal. A couple of things in here. He's kind of talking about investing, and this is one of the mantras that I even look at. And you guys probably don't know this about me, but I invest a lot in small businesses. And the reason is because in most cases, they return a pretty good profit on your investment. The problem is that only 1 in 10 of them hit, meaning out of 10 investments, 9 of those go to zero. And in some cases, you feel like you're being rug pulled in these, but in reality, it's just the risk of investing. His statement here is, the truth is many bets don't pay off. I agree. It's the nature of investing. Getting your investment time horizon to match your idea horizon is the superpower. What he simply means is you got to think long term. If you're looking at these fast turns, listen, you might get lucky for the most part, but on average, you're not going to get those kind of gains in these short-term runs. Now, granted, yes, there's been a really good run here over this last 6 months on Bitcoin, Ethereum, etc., that have really played into this. So he's further in the tweet, he says, I firmly believe secular trends compensate for the risk, and often those risks require you to stomach the 80% drawdown. We've seen that, for sure. And then, kind of just the lineup right here. So that's Raul going into it. I know we're going to get into some things here. One thing to be aware is Elon is definitely out there trolling again. Something special coming soon. And remember, Elon has been after this for quite some time. He has been looking at, visualizing what the potential future is for X.com. So definitely a big one. Let's go over to our, because I think this will have effect on what's going to happen in crypto. Twitter/X is going to have something to play into this. Let's go over to our poll for the day. Take a look. All right, what we'll have first, Gensler crashes crypto with one more time. Man, you guys are like split right there in the middle. I like it. I like it. What would that crash be? We've had a conversation and a debate here in the studio about what that might be, but interesting stuff. Love to know what you think it would be to get a crash. Couple of questions. PayPal offering, 4.3 on a savings account. Yes, I've seen that one. Jen Smith says, as long as he represents their interests, now Gensler can get a cushy job with Goldman when he retires, maybe. I think the thing is going to be him getting another government job, some sort of thing like that. So anyway, all right, if you guys like these live streams, make sure and drop some likes. That's one of the ways that will tell us, should you get these or do you like the premieres better? If you're not part of our Diamond Circle, make sure and jump in. It's very easy and it's free. Click the link down below. And of course, if you want to find me, it's out there on X. @PaulBaron. We'll catch you next time right here on TechPath.